Good morning. It's Friday, and 6:47. Markets just opened up 15 minutes ago. Overnight trading. I got some alerts because I think it was the Nasdaq and the Dow in the futures broke their support. So it started heading down, and then right before the market opened, the market started heading up a little bit. And now they're turning around. And if you notice here, the Russell has broken new lows. I mean, these are brand new lows right here. Of course, the ES and the Nasdaq are behind as far as going down, and the Dow's in second place with the Russell going down. So this is what I follow. This is pretty much my indicator. Like I mentioned, the Russells led the way down for over a year now, almost a year and a half. It's been going down, and before these other indexes. So that's pretty much my indicator right there. I just look at the charts and I look at the indexes. So for those of you that bought put options for the longer term, I'm sure you're making some money right now. So the key to that is, when are you going to collect your profits? So we'll talk about that in a second. All right, let's take a look at the Russell here. So the Russell started before 2022, somewhere around November. And if you look at the other indexes, they started way over here to go down. They started in their downtrend. So the Russell's a couple months ahead. It came down and pretty much balanced out in this area for a longer term, and it's got a long-term balance area in here. Okay, so you can see that the Russell's breaking down, and once it breaks down to this point, then it's pretty much in the clear, meaning that it's gotten past all of this, and now we're pretty much in a downtrend, and there's no stopping it. You know, of course, there's always a chance it can come down here and bounce and play around, and still play around in this area, but we'll see. But anyway, it's heading down to this area here. Same with the Dow Jones. It needs to break down at least into this area. Like I mentioned before, this is the big balance area since November. And it broke down, and it came up, it retested, and then now it's back down. So it's into this balance area here. It's created another balance area. It's right there. And once it starts breaking down in this area, now we're into another zone. And eventually it's going to do that. You know, of course, the question is when. And I'm thinking it's going to happen. Well, we still have time in this month, so it might stretch it out to the middle of next month, to when it starts getting down to this area here. And in the Nasdaq, same thing. You know, Nasdaq's got to come all the way back down to here. So when I see the markets up at the top like this, I think of that as kind of like a real estate bubble. You know, we are actually in a bubble, but I mean, it's like a real estate bubble where the only place it can go is down. And that to me means we've got lots of profits that can be gained right here. You can make a lot of money. So even if it goes up like this, it's not a bad thing if you're thinking the market's going to go down, because the further up it goes and the more that it's stretched out, the more profit you can make coming down. Okay, here's the ES. Same thing with the ES. You know, we're in a downtrend, and it's come up and it's tested that, and it's coming down. It's kind of stretching out pretty long. Surprised it actually came out this far. I would imagine at least to here would have started heading down, but now they stretched it out a little bit more, and now it's gonna start eventually coming down into this area, and I'm thinking it should start happening pretty fast. So as far as day trading, yesterday the market opened up and it shot straight up. And as I had mentioned, I like when these markets go up like this, because then, especially early in the morning, because there's only one other place to go and they're pretty close to their tops anyway. And it built this balance area, and I had mentioned this would be a good place to get into the market going down. And so the market did come down here, it retested, and it came down here in this perfect place to get in. Even if you got in here and then the market came up and you held your position, and eventually the market came all the way down here, so that was a good play, a good day trade. Of course, you have to watch a couple things. You have to know where you think this market's going to go. You have to plan this out ahead of time, where the momentum is, and if the market pops up early and touches a top, I'll show you what that is. So on a daily chart, this is the line right here. This market came up and it came pretty close to where it was the day before, so it's pretty much the top. I believe this is a spike, just like these are, and these tell you the market's on its way the opposite way. It's on its way down. You can have spikes going down and the market goes the opposite way, which is up. So that's what happened with the market yesterday. It came up here early, and when it comes up that high early and you still have 5 hours of trading, the market could only go one place. It could go up higher, but because I felt that the momentum is down, that wasn't going to happen. And that was right here in a day trade. This is a 5-minute chart. So the market just came tumbling down. So if you did get in here, you could have made some pretty good money. And as I mentioned before, you can combine your day trades with your longer term trades. You would just buy options that are further out, but always buy them in the money or at the money. And when the market starts heading down, let's say, not in this scenario because this is down here, of course I would have gotten out maybe even way before that. But as the market came down, let's say it turned back up and it came back into this area, and in a day trade you probably would have sold out. But if you're in a longer term, if you buy options that are further out and you're still day trading, so when the market does come back and test this, maybe comes up pretty high and you're thinking you should get out, but you're still thinking that this is a downtrend. So if you bought options that are out, let's say a month, and you're still thinking within a month it could turn around and come back down, then you stay in your position. And then the market eventually comes back down and you're still in that trade. And then you can get out and you can turn that day trade into a swing trade. So that's one way to do it. That's my way. I don't see anybody else doing that, and I'm surprised that they don't, because that's kind of protecting your day trades. That's just something that I learned a while ago. So if you're going to day trade this, the way I would play it out is, of course, I'd wait for balance areas, and there's a balance area that was created right here. But you got to realize this is an overnight trading. So if you're not an overnight trader after hours, then you don't trade that. And then it built a little balance area here, and then the market opened up somewhere around here. And now it's doing this business is going up and down. So what I would do is I would wait until this settles down. Now this could be the high of today, let's say, and then it comes down here and it's jumping around right now, so it's trying to decide what to do. So I would wait till it settled down and then maybe build some kind of balance area, and then you can see where the market's going to go there. I mean, it could go back up, it could go back down, but I would definitely wait for some kind of a balance area. Now this thing could just take off and go head down. And if you wanted to trade this, as far as that goes, without it building a balance area, then I would look at some pretty good, maybe some support right in here. And you can probably put something in here as far as you got a zone right here. And once this gets into this zone right in here, then you can start deciding what you want to do. But like I said, you got to have either a balance area or some kind of a zone in here on how you're going to trade this. From here, I wouldn't trade this because you're pretty much guessing 50-50. It could go up and it could go down. So I'd wait until it got into this zone. And once it starts breaking down below this, then you can decide if you're going to get in on a day trade. Now, I would definitely look at the other markets too. I would look at the Russell and make sure that the Russell is continuing to, right there's a Russell, will continue to go down alongside with that. Because if the Russell's coming up and the ES is kind of sitting there and this continues to go up, then of course I wouldn't trade it down. Now, you could trade it up with call options, but like I said, in this kind of environment, I don't really like buying call options. It's just, it's unpredictable. I mean, because the market's going to turn around at some point. You could do that and maybe just do scalps and just maybe collect 10 points, maybe at the most 20 points, and then get out. So I would definitely look at a couple charts. One of them is a Russell, and I would continue to see this. Russell came up here, so I definitely would not trade this thing down on the SPYs yet. Because, yeah, let's see, where was I? I guess I was in the ES. Okay, so you're not going to be trading the ES, you're going to be trading the SPYs, which piggybacks on this. But let's say this is a SPY chart. So the market continues up. I looked at the Russell and it wasn't going down. It was kind of coming up. All right, here we go. So we got two charts here. We got the SPYs, the spiders, which I trade options on. And then you got the Russell right here. And Russell is broken out of this big balance area. This is a big deal for the Russell because, of course, it's leading the way down, and the other charts haven't done that yet. Not yet. They will. But right now, as far as a day trade, 5-minute chart on the Russell, 5 on the SPYs, and the market's up here. If you're going to short this market, then obviously this is not a place to get in. You're going to have to wait. Still early. It's only 7 o'clock in the morning, so the market's going to be bouncing around a little bit at this time. But like I said, once it gets down into this zone right here, you know, I created a zone from some resistance and support line off of this. This is the support, that's the resistance. Now that the market's above this line, this would act as support. And that would be a bounce off area if you're going to go long. But like I said, I would not trade this long because the sentiment of the entire market is down. Momentum's down. So I would wait till it gets down into this area, and eventually when it starts breaking out here to get in. But I would definitely look at the Russell. If the Russell turns around and starts coming down into this area, especially when it breaks a low, that would be a perfect short to get in. Now you have to always look for retracements because these markets always retrace. So even if the market came down here and it turned around and came back, it could retrace or even pop up into here before it went down again like it did yesterday. So that's not unusual for a market to do that. Now it could pop down and just stay down. You know, there's a couple scenarios that can play out. But if you're in for this market going down, then, like I said, if the market comes down here and it pops up and you might have to get out, this is on a day trade, then like I said, you can combine your option trading with day trade and swing trade, where you can buy options that are further out, let's say a month, believing that this market ultimately is going to go down in a month. Then you can even stay in. Now, if it starts popping up again over here and starts going up, then I would kind of say, well, I'm not sure if I would get out yet. That's, you have to look at the longer term charts, make sure it doesn't break new highs. Look at the Russell. You don't want the Russell getting back into this area. If you're in there for a month, then possibly you're okay. If you're day trading and your options expire that day, and you start buying down in this area and starts popping up in here, then you have to be concerned about getting out with a small loss. If it starts going up into this area, then it's kind of dangerous, as far as now you're starting to lose some big money, and you have to decide if you're going to get out, because you only have one day to trade. So that means during that day, that market has to come up, turn around, and come back down. And it's possible, but I would not take that chance. So I'm pretty sure today, Friday, this market will continue down, but we'll see how that goes. These markets sometimes are unpredictable in the short term. Longer term, no. I mean, like I said, this market's in a downtrend. But the short term, day trade, yeah. Okay, so that's it for day trading. Like I said, just in summary, I'd wait until it got into this zone, and then this definitely needs to get down and start heading down before I would buy some put options going down. It's still early, like I said, 7 o'clock, so we still have, whatever, 5 hours of trading, and these markets can't go up that early and stay there, or go down that early and stay there. There's so much time in trading that it needs to go up and down. This is a buy-sell game, meaning that the market, people sold here and they bought here. So it has to move up and down. So ideally, of course, the market comes down here, it comes down here, and it kind of sits around for a couple hours and then heads back down. It could do that. Okay, so that's it for day trading. Again, look at the Russell. Make sure that if this thing starts heading down this area, that you're not going to buy until you start seeing this Russell come down. I hate to repeat myself, but in trading, that's what needs to be done, because you need to build these habits, very strong habits, and then you'll be consistent in making money in these markets. Okay, so I got all 4 charts up. You can see the market here on the SPYs has been going back up, and these are retracing a little bit too. Dow Jones, and same thing with NASDAQ. So there's not really a lot going on. The market is down compared to yesterday. You've got what do we got? Minus 117. I think overnight trading it was down about 300 points. So it's down quite a bit. But anyway, market came back up, which is not a bad thing, because it could be a good short position. But again, you have to wait. I'm going to wait for this Russell. Russell breaking down out of this balance area is a good sign. Just to let you know, I have some put options, April's, that are going to expire in about 2 weeks. So I'm definitely going to get out of those options today. No matter what, I'm getting out. And then, like I said, it doesn't really matter if you get out. You can always get back in. So you got to remember that. It's very important. So never think that if you get out, if you're up, let's say $5,000 and that's your profit, and then the market turns around and comes up and now you're only up 2,500, it's okay to get out because you're still up 2,500. But I'm turning my options around into a month, May contracts, because I like to feel safe. I mean, 2 weeks might be okay. I just don't like that feeling. And when you're trading in the market, very important that you feel very comfortable with your trades. You don't want to have any anxiety, and you don't want to not sleep at night because of that. So you want to feel pretty safe. Okay, I think that's it. I'm going to wrap this up. You could start placing your alerts if you want. I'm going to place another one down here with the Russell because I can pretty much walk away. There's not a whole lot I can do here. I'll say below. And once it gets down to that point, then I can decide what to do. If I'm going to day trade, then I'm going to have to be stuck to the computer and look at it. Not so much stuck to it, but I can actually set alerts for that too. In fact, okay, so I'm back to the 5-minute chart. Something I missed here. If you're, day trading, and of course you look at the Russell where that's going, and here's the SPYs are coming back into this area. You can place a stop in here. Not a stop, but an alert. And if the market starts heading down there, then that can tell you, good time to get in. You can also put one in here, let's say. If you're going to, let's say, walk away, you're going to go outside or whatever, but you're close, and it alerts you. So this way you can come back and into the computer and start and just set the alert. Okay, and then now you have to be watchful about what's happening in this area. Then you can decide what you're going to do, or like I said, you can actually walk away, maybe go get some breakfast or some coffee, and this alert's going to tell you, that you're getting close to maybe entering a position. And let's say it set this alert off, you'd run over to here and you say, well, where's the Russell? How close is the Russell? It'd be ideal if this Russell actually broke the low before you got in. Because sometimes, like I said, the market could turn around and come back up and test it, and if it comes down, then that would be a perfect time to get in. So that's what you're going to have to watch for. Okay, so I think that's it for today. Like I said earlier, I have some options that are expiring in about 2 weeks, put options. They've already gained some value. No matter what happens today, I'm going to get out of those options, and if the market continues down, I'll repurchase them Monday. We'll see what happens Monday. Anyway, so far everything looks really good. If you have any questions about anything, just let me know. I've got, like I said, I've got 24 years experience trading, but I only have about maybe 4 months experience in teaching. So I'm not going to probably cover everything, but if there's anything that you want me to talk about or even make a video, just let me know. This is all free, not charging for this, and just I'm doing this as I'm trading. I'm also trading too, so why not just help people out doing that. Now, I might be making a course. Some people are asking me to do that, and if I do, I will charge. But I'm not going to charge as much as everybody else. They're charging anywhere from $400 to $1,500 in courses. I might charge, I don't know, maybe $100, $200. Not much, because that's not where I make my money. It's in trading. Okay, so it looks like the market's getting kind of starting to turn around again here, and so we'll keep an eye on it. Okay, so that's it for today. One more thing I want to mention. I'm going to make a video on this. The news, you got to learn to ignore the news, because as you can hopefully see now, that sometimes the market goes up and they talk about, I don't know, I think yesterday or day before, the market was going up, and it was because now people are not worried so much about bank failures, and then the market goes down. They're saying, oh, now they're worried about bank failures, and it has nothing to do with the news. The market goes up and down because it's a buy-sell game. So obviously the market's going down on good news and it's going up on bad news sometimes. So just ignore the news. It has nothing to do with the markets. I know that's hard to believe, but they're just playing with you. That's what they're doing. And so you just look at the charts. It's all you have to look at, and this tells you everything. Okay, that's it for now. All right, talk to you guys tomorrow.